Welcome. My name is Van Richards. I'm a chartered financial consultant, and I'm here to teach you how to make better stock decisions. And today is a viewer's choice day. Conti 11MC wrote in on YouTube and asked this question. Conti 11MC said, "Can you please have a look at Energy Transfer with the enormous dividends?" And yes, Conti, we're going to take a look at Energy Transfer today on the daily stock analysis. So let's get started. Thanks for joining me today. I have a lot of really good information to bring you about Energy Transfer. I love when you write in and you ask questions and you ask me to look into different types of stocks. There's so many, I can't really understand all of them or know about everything, but I can do the research and I can bring that research to you so that I can help you make better decisions. If this is your first time to visit, go over and hit the subscribe button. If you're on YouTube, hit the bell so you know when I put new content on the platform. If you're listening on a podcast, make sure that you follow me because you'll get great information on a regular basis. Now, as we begin in today, I want to thank our first sponsor, which is going to be Richards Financial Planning. Richards Financial Planning is my firm, but my idea is this in financial planning. If you're frustrated with the direction of your finances, Richards Financial Planning can help you. Go over to richardsfinancialplanning.com and learn more about what I've designed, which is called the Prosperous Planning Process. You will be well rewarded. So let's go ahead and begin talking a little bit more about Energy Transfer today. And I think that you're going to enjoy learning about this company. There's some controversy going on in here with Energy Transfer, but I don't think that it's something that's overwhelming and insurmountable. But let's learn a little bit more about how the company is designed and what their direction is in itself. Energy Transfer really has 5 primary segments: crude oil, NGL and refined products, interstate and intrastate transport and storage, and their midstream operations as well. Now, their earnings are primarily supported by fee-based contracts, and that's important to think about when we talk about the dividends. They do have government regulations, which is a hurdle for them to overcome, but I don't think that it's insurmountable. If you look at an overview of their assets, they are all over the place. They're centralized in Texas, but what you're going to see if you look at a map is they're all over the place. The company is worth about $17 billion. I know on the screen, if you're watching, it says $17 billion. I believe at noontime when I looked, or close to noon, it was at about $17.66 billion. They're having a really good day on Wall Street. They're up about 2.91% at $6.54, close to $6.55 per share. But always when we're looking at a stock, we don't look at the stock just for we're going to buy a name. We want to look at the company itself. And there's 3 things that I teach you that you should look at. It doesn't matter how you're going to pick the stock for dividends or growth. You look at the stability of the stock, the earnings of the stock, and the competitiveness of that particular stock. And the very first thing that we look at when we look at a company and we're trying to figure out how stable they are is we look at the moat. Remember, that moat characteristic is something that Warren Buffett came out with and is popularized. And if you go over to Morningstar actually says that Energy Transfer does not have a moat. I disagree with them, and this is the reason why. There's 2 reasons why. Number 1 is they have the largest intrastate pipeline system in the United States. They have over 90,000 miles of pipeline with connections to every major U.S. asset as far as energy goes. Now let's look at the net income, because the net income is the bottom line if we're looking at dividends. You're going to find out that, yes, this company does have a huge dividend. We have to look at what their history is to see if they're able to support that dividend. Now, always I'm going to tell you that the past performance can't be a guarantee of the future, but if you don't, this is my part added in, If you don't understand what the future, what the past is, that is, then you're not going to understand the possibilities of what's going to happen in the future. So we're going to go back in the Wayback Machine to 2017 and look at what the net income was. Now, these are non-GAAP numbers. These are numbers that are produced by Energy Transfer. They're not completely conforming with general accepted accounting principles, but what I found in looking at this is these are actually more conservative than what's conforming to the GAAP numbers. In 2017, they had net income of about $2.315 billion. That jumped up in 2018 to $3.42 billion. Then in 2019, see, we're on a trend here. It went up 41% to $4.825 billion. Now hold on to your pants here, because you're going to be blown away. You're going to see a bad number, but it's okay. It's not going to last forever, we hope. The bad number is this. In 2020, and this is just in the first 3 months of the year, they had $693 million in losses. I hate this number, but I have to say it. They had a 114% decrease in net income. And, you know, there's this thing called a pandemic. I think that the earnings are going to help support this. And this is what I mean when I look at that. When I look at the net income over the past year, let's go at it quarter by quarter, just in 2020. The first quarter, this was like right when the pandemic started to hit. They lost about $964 million. In the second quarter, they jumped back up to $672 million. Then in the third quarter, they were down $401 million. For the 3 months of the 9 months at the beginning of the year, that's where they got the $693 million loss. It may be more than that once they declare all of the earnings or losses for 2020, but that's not out yet. Hopefully that'll be out pretty soon. Now, let's look at EBITDA. Remember, EBITDA is the earnings before interest, taxes, depreciation. This is what is supporting that dividend. In 2017, they had an EBITDA, earnings before interest, tax, depreciation, all that kind of good stuff, of about $17.26 billion. 2018, $9.565 billion. 2019, $11.140 billion. 2020, $7.939 billion. You have to understand the 2020 numbers is just for 9 months. So we've got a pattern going on here. Look at the last 3 quarters that were reported. $2.6 billion in the first quarter of last year, $2.4 billion in the second quarter, $2.8 billion in the third quarter. I think that their dividends are going to do okay. And this is why I think the dividends are going to be okay. One of the biggest problems right now that's facing Energy Transfer is the Dakota Pipeline access. And that's in the news a lot. I think that it's overblown as far as Energy Transfer goes. It's not overblown as far as, like, you know, the Sioux tribes that live there. It's a serious situation. They deserve the respect of looking into the situation. But understand this, that as far as the EBITDA goes, remember we had EBITDA. Let me back that up just for a minute and look at it. When we look at the EBITDA just for the last 9 months of 2020, it was $7.9 billion. And the point that I want to bring out is that the estimated earnings, the EBITDA that is related to the Dakota Access Pipeline, is only $700 million. That's only 6 to 7% of their annual EBITDA. So if the Dakota Access Pipeline gets drained completely and there's no revenue from it, it's only going to impact the overall EBITDA by about 6 to 7%. So that's not a bad thing. Now, I bring this up because there's a lot of information in the news right now about shorting stocks. And I want you to know right off the bat, this is not a squeeze candidate. The short float, that means the percent of stocks that are shorted is only 2.17%. That's not very much. So this is just not a short situation to look at. We want to look at the health financially of the company, if they're able to continue to pay their bills, to pay operations. Because if you buy this, you're probably going to be interested in the dividend. I'm going to tell you about that a little bit more in a minute. But when I look at the financial health of a company, even if it's a great big $17 billion company like Energy Transfer, I look at the current ratio, and the current ratio is the basic statistic. It takes the current assets, what they own, divides it by their current liabilities. And I compare that to what's going on in the industry. The current ratio right now for Energy Transfer is 1.02. That's actually pretty good. If you compare it to the average transportation, communications, electric, and gas company that's out there at about 1.05, 1.02 as far as the ratio is good. Now, here's a negative number that if I was going to be putting a lot of money in this stock, I would keep a careful eye on, and that is the debt equity ratio. The way that they do that is they take the amount that's owed and the shareholders' equity and divide it. It's at 2.56, and the average transportation, communications, electric, and gas company is at 1.57. So its debt equity ratio is high. We want to keep an eye on that. So we talked about stability. Let's look a little bit more at the earnings. We talked about the net income. As far as the earnings go per share, if we go way back to 2014 and track it by chart, you can see actually that Energy Transfer has had very stable earnings. Of course, you know, they had a big hiccup there with the beginning of the coronavirus, but the idea is that their earnings are based on contracts. So they've actually done pretty good, and they're projected to continue to do that. But I always have to emphasize that the past performance of these stocks is not going to be a guarantee of their future results. Now, here is one of the best parts, the dividend. The dividend on this stock is awesome. There's no two ways about it. Conti 11MC, thank you for bringing this to my attention. This company right now has a 9.73% forward dividend. It's huge. But the point is on this too, that, you know, you can't let the past performance be the guarantee of what's going to happen in the future. But let's take a look at what has happened in past years with the dividends. If we go back to 2014, their dividend was down to about 2.61. Now, let me run through these really quick for those of you that are listening. If you're watching, you can follow along on the screen and you'll see. So 2014 at 2.61%, 2015 at 7.42%, 2016 at 5.9, 2017 at 6.66, 2018 at 9.24, 2019 at 9.51, 2020. This is because of the drop in value of the coronavirus in March. A 17.27% dividend. That's based on a low stock value. The trailing 12 months has been 17.03, but right now the average for the last 5 years is at about 9.96. So, yep, it is a big old dividend, but you got to remember the past performance is not a guarantee of what's going to happen in the future. Hey, let me stop just for a second, ladies and gentlemen, and thank our second sponsor of the day, which is Advice for Life Insurance. Your family needs you. Protect them with life insurance. You can find the best life insurance at the lowest price in less than 5 minutes on adviceforlifeinsurance.com. Go over and check them out. Now, let's look at what the bulls and the bears are saying about Energy Transfer. Here is the first bullish characteristic. Number one is they have a diversified business model, and it does reduce the effects of market pressure. And market pressure, you can see in the news that there's talks between Exxon and Chevron right now about merging. So there's lots of things that are happening as values go down, and consolidation is a big thing that's happening right now in the oil and gas business. The NGL exports are really set to improve revenues, especially as they ship the natural gas products offshore. Now, one thing is too, if you go back to 2018, you can see the effects of a merger that this company had in 2018. They had two operations going on at that point in time. They had the Energy Transfer Equity LP and the Energy Transfer Partners LP. They combined that, and it's actually simplified the structure. And that is a bullish characteristic because it's making the operations much more efficient. Okay, now, as you know, and I know too, the best things are not always the way that they appear to be. There are dark sides to every single stock that's out there. That's just like life in general. One big bearish characteristic that is staring at Energy Transfer right now is the legal and regulatory risk that are out there. The Dakota Pipeline, if I can find this article really quick, I'll go through this and just explain it to you. The Dakota Pipeline right now is in a situation where you have a federal judge that has at one point said, you have to stop this, you have to drain the pipe. Then you had an appeal that came by, and in the appeal, the appeals court said, no, you don't have to drain it, but you do have to come up with a plan as to what you're going to do from an environmental standpoint. The Trump administration has let it continue going on without an environmental study being completed. But the question is going to be, what is the Biden administration going to be doing? So the legal and regulatory risk right now are huge for Energy Transfer. The other thing is the merger and acquisition efforts that Energy Transfer has had in the past have helped the company grow, but it has not enhanced profits a great deal. The other thing is that as we go into the future, and there's a good prospect that we're going to have higher interest rates. I'm not predicting it, but I'm just saying if you look at what's going on right now, it's pointing in that direction of higher interest rates. Higher interest rates make higher dividend paying stocks less attractive because there's more risk in the stocks and there's less risk in the dividends of bonds. But the other thing is too, you have to look at the characteristics that there's not too many places that you can go to get a 9% dividend. Even if we go and look at government bonds right now, they go over 1%. But there's a big difference in between the safety of those two things. So let's look at what a fair value is going to be. You're going to have to make the decision on what you think the fair value of Energy Transfer is. But let's look at what Morningstar says on this stock. The current value, I put up $6.43 at about noontime. It was trading at about $6.54, close to 55 cents. And this, my friends, is a 5-star stock according to Morningstar. So if we look at what their valuation is, they're saying that this stock right now has the potential to be $20. So that's a big difference. That's a 67.85% discount. That's big. Let's see what some of the other different analysts are saying about Energy Transfer right now, and look at the wide opinions that exist. The most pessimistic viewpoint right now is coming out of Piper Sandler. Piper Sandler is picking a price in between $6 and $8. Remember, they're trading at $6.55 right now, just about. So they're pretty close to it, but that huge dividend's really making things look good. Stifel Nicholas is looking at a price between $13 and $12. That's big. That's really big. So we have to wonder what's going to be going on in the future. Now, the most recent opinion comes from Barclays. Barclays is looking at a price between $9 and $10. That's still a big increase over top of where they are right now at $6.55. And let me tell you what, the Dakota Pipeline, in my opinion, is overblown. This is the opinion. This is the quote that came from the AP on the 26th, just basically a couple days ago. U.S. District Judge James Brosberg said in his one-sentence order that the Army Corps of Engineers needs to show how that it expects to proceed given the vacating of the federal permit granting the easement for the pipeline to cross beneath Lake Ohi. Now, here's the controversy that I think that's going on. The Sioux Indians are saying that they're scared that the pipeline is going to pollute everything, and it's going to pollute their water, and it's bad. Now, the permit, as far as the environmental protection goes, they don't have the pipeline company, Energy Transfer, their permit has expired, and the Army Corps of Engineers has allowed them to continue to operate without that. So what the judge is basically saying is, what are you going to do? You have to do something. You have to either tell us how you're going to manage this with the environmental impact, what the possible environmental impact is going to be, and how it's going to work toward the future. So The big question is going to be, is the Biden administration going to step in and tell the Army Corps of Engineers, you need to enforce this and tell this company to shut down that pipeline? And if they do, remember this, that it is going to affect the bottom line of EBITDA by about $700 million. Now, here's the big thing. This company has been operating without problems for about 3 years, and there's been oil flowing through that pipeline. So that's going to aid their environmental study, but you have to understand who's going to do that, or ask the question of who's going to do the environmental study and who's going to render the opinion on it. There's lots of questions out there, so we just have to wait and see. But the point also is going to be this: if you're looking at buying this stock just because of the Dakota pipeline, you're making a mistake. The reason is that Dakota pipeline only represents about 6 to 7% of the annual EBITDA, earnings before taxes, depreciation, etc. Now, let's look at what's happened on the price of Energy Transfer over the past year. It's had a bad year. There's no two ways about it. It started off a year ago in February of 2020 at about $11.94. It was about an hour ago at $6.55. It's down about 45.18%. So when I say the past performance is not a guarantee of the future results, we hope so. All right, now let's go in the Wayback Machine just a little bit more. Let's go back 5 years, because I think it's really good to look at the perspective of this stock. 5 years ago, if we go back, now I know this says 2020, but it's not 2020. It's going to go back to 2015. That number should be corrected. But in 2015, the price in February was at $4.59, close to $4.66 per share. If you look at it today at $6.55, that's a 42% increase over that point in time. And that's a 7.33% annual percentage rate increase over top that. Now, if you look at the graph, you can see that it's been much higher. So right now we're at a pretty low point, and that 7.33% annual percentage rate is in addition to that huge dividend that you've seen out there. And as always, folks, the past performance can't be a guarantee of what the future results are. And when we look at any company, remember that three-step thing, the SEC, the stability, the earnings, and the competitiveness. Let's look at the competitiveness. What other companies are doing what Energy Transfer is doing, and how are they competing? Probably the best resulting company that's similar to Energy Transfer is going to be the Williams Companies. The Williams Companies has had a really good year, close to 10%. We'll take a look at that one on another day individually. But also Kinder Morgan and Plains All American are in the same type of business itself. And those companies have actually been right about lockstep with each other. None of them have made profits except for Williams Company right now. Now, how does it compare to the averages? This is the way that I did this. This is something new that I added in. I looked at Energy Transfer, and I looked at the last 12 months. According to the Morningstar report that I pulled this from, over the past 12 months, they are down. That's Energy Transfer is down 43.51%. The sector is down 24.41%. And when we compare that to the U.S. economy, essentially that's tracked by Morningstar, it's up about 20.9%. So yeah, it's underneath what the sector is doing. It's underneath what the economy has done. But do you want to buy a stock on the top, or do you want to buy a stock on the bottom? That's the question that you really have to ask yourself going forward. So when we look at every stock, I'm going to remind you again, is it stable? Look at the earnings on this company and look at how stable the dividends are. Is that something that you are interested in? How are the earnings? What's supporting the earnings? Contracts are supporting earnings. How competitive are they? With their peers, they're pretty competitive. With the economy, they're not. But in all, my opinion on this stock is that It's at a low point right now. And if you're interested in a stock for dividends and you can tolerate the risk that's associated with it, this is a good stock for dividends. So keep that in mind. But you have to make decisions based on what you are looking for in your finances and based on what you can afford and your tolerance. I can't make that recommendation for you. So folks, thanks a lot for listening today. If you just joined in, go back and watch all this. There's so much information here. It's not boring at all. Just keep going because there's so much information. You don't want to miss a minute of it. Also, there are limitations to the information that I can supply to you. So it's real important that if you're watching in just a moment when I play the disclosure, that you read it. If you're listening on a podcast, make sure that you listen to the disclosure to see what the limitations are to the information that I'm going to supply to you. If you have a stock that you're interested in, just like Conti 11MC did today and wrote into me and said, hey, could you take a look at Energy Transfer? I may do the same thing for you. I enjoy helping you all out. Let me know your comments. Hey, let me know where you're writing from. There's people from Switzerland, Russia, South America, Africa, Asia, all over the place. I love hearing from you. Let me hear from you and let me know what your stock preferences are and what your thoughts are. So coming up right now is just the disclosure. Thanks a lot, and we'll talk to you on another day.